Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast, the show that brings you the latest insights, thought leadership, and stories from across the global mining industry. Today, I'm joined by Jeremy Gray, a highly active mining executive and entrepreneur, currently serving as the CEO of a number of companies called Peter Gold, Pure Tungsten, Tuscano Gold, and Gold Road, and most recently, the founder of Chancery Royalty. Jeremy's operating across multiple commodities, jurisdiction, business models at a time when obviously gold and critical minerals and alternative finding structures are all firmly back in focus. In this conversation, we're going to explore how he thinks about building and running multiple companies simultaneously, why gold, tungsten matter right now, what royalties offer that traditional mining doesn't, and how he sees the next phase of the mining cycle unfolding. And we're going to cover obviously a lot more. So Jeremy, welcome back to the podcast. How are you?
How are you, Rob? Really great to be back, mate. Thank you.
No, that's good. And we probably spoke, 4 or 5 months ago. And I know you're doing a lot of things online. So that's why I thought be good to get you back on, especially as a new year as well. So for those that didn't listen to the previous episode, I just wonder if you can just give us a snapshot of yourself, of your career, and obviously telling us what you're up to at the moment.
Yeah, thanks, Rob. Well, very quickly, we have 6 companies, 4 gold miners, Pilar Gold, Liva Gold, Tucano Gold, and Gold Road. We've just also have a large tungsten, pure tungsten, it's called. We're actually just about to go in production in South Korea, down the road from Almonte. So we think we're the next Almonte Industries. But I've actually stepped down from all of my CEO roles on the operational side to focus 100% on Chancery Royalty, which is where we're basically, we think, building the fastest growing gold and silver royalty group in the industry.
Yeah. As I mentioned, you're currently involved with obviously a number of commodities and obviously now royalties. How do you think about running obviously multiple companies and platforms at once? And what's some of the common principles that guide your approach across obviously various assets and obviously at various stages?
I think the key is to delegate and to let go and not to control everything that comes in the company. So is to find strong management and let them run with it. And really my job was to find them the money to start the gold mines or to start the tungsten mine in South Korea, and just let them run with it and not be a control freak, really. So that's been the model for 7 years. It's worked pretty well. It helps a lot more when gold's not 1,600, but rather 4,400. And everything moves much faster when the market's strong, you're producing good numbers. So just let the professionals run the business, because I'm not an operator, Rob. I'm not an operator. I tell you, I heard a nice interview you had with Martin, the chap who worked at Centamin. Now, there's a real operator. He's the sort of guy we would hire and love to bring into our portfolio. But I'm a promoter, and I like to make deals, and royalties are the ultimate in deal making.
Yeah. You mentioned obviously the gold price. I know on our last episode, you mentioned 5,000 was the gold number. Hasn't quite reached that, although I think it will do fairly soon. What are your thoughts on that? And it's up to you whether you want to give a prediction or not, but what are your thoughts as to why it may have not got to that level?
I think that's kind of around the corner, probably in the next 2 to 3 weeks. And we're estimating 5,500 by Chinese New Year, which is on the 17th of February, but eventually 7,000 by Christmas. The way I more and more think about it, it's a little bit, I just reflected on when I bought my first house in Melbourne, in Richmond, just next door to the MCG. And we bought it, my brother and I bought it for 240,000 Australian dollars, and thought we were absolute heroes when we sold it in 3 years later in 1996 for $650,000. A beautiful old Victorian, beautiful house, one of my favorite houses in Melbourne. And now it's, I don't know, 4 million. And I think that's the way you need to look at gold, that don't be too quick to sell. And everyone says, oh, 2025 was a great year. It won't happen again. Some gold funds, Jim Luke's fund at Schroders was up 200%. And they go, oh, Jimmy won't do that again. I bet you he does. But he may not 200, but it's going to be at least 100%. So I think we're in an early stage of a very, very big move. And don't be scared by these high prices. They're not coming down anytime soon.
Yeah. Obviously, carrying on with gold, and obviously gold has moved in and out of favour over the years. What's different about the current gold environment now, and why do you believe it deserves renewed attention from investors today?
Basically, China started the rally. Every time I walk past a Chinese person, I go up and give them a hug and burst into tears, because they really saved our group, because we were doing it tough back in 24. And then the market broke through 2100, and, the rest is history. But basically, China's consumption is 10 times, I think, higher than what the official numbers are. India is still strong, but now you've got players like Tether, and you've got all the central banks. And I even heard only yesterday that the Turkish central government now pays a 3 to 4% premium to the spot price just to get the physical. And that's why another classic telltale sign is that we just have non-stop calling from Dubai refineries. Hey, can we do your offtake? And in the old days, it used to be, I want to buy your gold for 4%, 5% discount because I rip off the Africans with a 10% discount. Now they're offering half to 1% premiums. So the market, it's all about physical now and replacing the paper market. And I think we're all going to be surprised. Yeah,
Yeah.
it could get really exciting this year.
Yeah, definitely. Staying on precious metals, obviously gold is your commodity. What about silver? What are your thoughts on obviously silver? There's been a lot of things happening in the market. Obviously, China just came out the other week where they have to have obviously licenses to export silver, physical silver out of the country. Just wonder what your thoughts are on the actual silver market. And I suppose how's that compared to the gold market that you're in as well?
Yeah, silver will probably hit 180, 200 by the year end. No supply, been in deficit for 5-6 years. Huge short base from, if you believe the conspiracy theorists, 4 or 5 years of mine supply is the current short base. Gold is probably be short 2 years of mine supply. So there's a lot of sleepless nights, I think, by some of the bullion banks and the big banks of just how big their short position is. So yeah, it'll definitely go higher. And that's why in Chancery Royalty, we managed to secure the silver offtake, or the byproduct, from our lovely Gold Road mine in Arizona, because we wanted to have silver in the portfolio to give it a bit of extra spice.
You're involved in operating and developing and obviously growth stage gold businesses. How do you think about risk and value creation, obviously differently across operating assets versus development projects? And where do investors often misunderstand that kind of trade-off?
That's a tough one, Rob. I mean, our business model for 7 years is buy big secondhand gold mines and then run around looking for the money and trying to turn them on, and buy them at 1 to 4 cents in the dollar, 5 cents in the dollar. And we've been successfully doing that. Pilar, we bought in 21 from Equinox Gold. We bought the biggest gold mill in Europe. In Finland, Liver Gold, that's turning on in 3 months. We bought the biggest, I think the best gold mine in Brazil, Tucano Gold, Mina Tucano in Amapá. We bought that for 3.7 million. It would cost you $1 billion plus to build it today. And then we bought Gold Road for 5 cents in the dollar in Arizona. So we've never been in the development phase. And also with Pure Tungsten, we've merged with GBI in South Korea with our wonderful CEO, Tiger Kim, and fully built mine, fully built mill. So we don't generally go to the early stage stuff, which is obviously they're doing well at the moment with the market. So
Obviously, tungsten doesn't get the same airtime as obviously the precious metals and I suppose lithium and copper. Yeah, it's obviously strategically critical. For those obviously less familiar, what makes tungsten so important, and why do you see pure tungsten as obviously as being well positioned in today's geopolitical and supply chain environment?
The beauty of tungsten, Rob, is no one's built a mine in 40 years and a lot of them have closed. China used to be a very dominant player and now they're big net importers. The market's gone from 320 18 months ago to over $1,050 per 10 kilos. So it's selling for $100,000 a ton now, which is pretty spicy. You know, copper sells for, what is it, 14,000?
Something like that.
Something like that. So it's a very high value add commodity. And when you've been in a bear market for 40 years, that's kind of good because no one's built anything. And it means when demand suddenly spikes, everyone's caught short. So it's a market, I think, that could actually double again. And we announced the merger with Tiger in GBI a year ago. No, wasn't it? No, 8 months ago when the market wasn't in favor. And you have to do these deals when the market's not in favor. So otherwise, you're going to get crowded out by all the fast talking promoters in Perth and Vancouver. So tungsten's going to be a very exciting commodity. Sanjong is, I think, going to be just as good as our Monty's Sandong mine. And we also have a beautiful JV partnership in Tajikistan where Tiger's secured Maikuhura, which I think might just be the highest grading tungsten mine in the world. It supplied the Russian army with a third of their tungsten needs during World War II, has a massive stockpile of tailings and a resource that could go for another 50 years. So Pure Tungsten is pretty exciting little company that we have. And we're going to launch that. I want to list it on the New York Stock Exchange. I'm looking for a SPAC at the moment. And I think it's $1 billion company all day long. I mean, our Monty is 3 billion Canadian now. So, and credit to them. Lewis is doing a fantastic job, Lewis Black.
I want to speak about something that's really you're really excited about now. There's obviously you recently launched a Chancery royalty. What attracted you to the royalty model, and what advantages does it offer, obviously compared to traditional mining ownership, both from a risk and capital allocation perspective?
Look, I came from the royalty game before we got into the gold mining business. We were the largest investor in a group called K92 in Papua New Guinea. We provided Tukey, the late great Tukey, rest in peace, and at the time, Ian Stalker, a 0.5% royalty, 8,000 ounce stream, and we owned 25% of K92 in stock at, I think, 20 cents a share. The stock's now $24 and a 5 billion market cap. But so we've always come from the royalty game. But we sort of, back in 2019, we swapped our royalty hat and moved into buying gold mines. And that wasn't particularly a fun journey because royalties are, it's a lot less stress running a royalty business. So the royalty guys can never go and become gold miners, but it's very easy for gold miners to switch and become a royalty guy because, it's being a gold miner is like being a doctor on 24-hour, 7-day-a-week call. And the royalty guys, lots of long lunches, I think a lot of them do. So in very expensive clubs that we're not members of. So it's since we launched it 5 weeks ago, we've been absolutely shocked by the response. We've got three producing royalties, one very large royalty, Kefi, in Ethiopia, that starts production in 19 months. And we're on the hunt for a couple more royalties to get ourselves hopefully bigger than Versamet or Elemental, who are kind of the golden children of the mid-tier space. And we're just really excited about this business. It's been a massive revelation for our team. We haven't had a day off over Christmas. Ed and the boys were working on Christmas Day just because we've been flooded with investor interest in our current funding round. It's just been amazing. I've never seen anything like it.
Yeah, good to hear. And I suppose moving that business along, what are you looking to, I suppose, your objectives for the business, and how do you see it, I suppose, planning out for the next sort of 3 to 5 years?
Yeah, well, we are basically I like to think of ourselves as the Costco of the royalty industry rather than Harrods Food Hall, which is where the other guys hang out. So I'll give an example. We met, so our fourth transaction, Kefi, which I think is the most exciting undeveloped gold mine in Africa today, in Ethiopia, in one of the greatest countries in Africa. And we met Harry, 5 weeks ago? No, it wasn't even that, a month ago. We're going to fund him in 2 weeks. So we're going to fund from meeting to just 6 weeks. We went binding in 3 days after the meeting. We don't charge exorbitant due diligence costs. We actually don't charge anything. So most royalty guys will ask for $300,000 to $400,000 just to take a look at your project. Then they'll hire the most expensive lawyers in Vancouver or London and charge you another $200,000. We cover all that ourselves because we have an in-house team, and we're gold miners. So, we know mines pretty well. And let's be honest, at 4,500, there's not many mines that won't pass due diligence. So the old model of royalties where you spend 6 months doing diligence and asking just ridiculously stupid questions are gone. You have to wake up and reflect that the market is not going back. We're going to 7,000. And if you want to put royalties in your portfolio, you've got to move damn fast. And we're the fastest on the street. So we have significant access to capital. If we want to do another deal, we raise the money quickly. We're cash flowing 3 already. Well, one's cash flowing at Gold Road in Arizona. Pilar starts next month. Liva starts in April, May in Finland. So, yeah, we're sort of a little bit of a different model to the old exclusive members club, which is what the royalty game's been for the last 10 years.
Yeah. You've obviously operated through multiple market cycles. How do you think today's capital markets differ from previous cycles? And what do mining companies need to do differently to earn, really importantly, trust, capital and patience from investors this time round?
Well, Rob, you went through that very dark, horrible period from 2012 to 24, where the gold miners were just terrible, right? And raising money was virtually impossible. Many mines went bankrupt. Projects got delayed forever, and the reputations of developers went to an all-time low. Yeah, because they simply couldn't find any money, not due any fault from their own, but just the market wasn't there. So when suddenly the market's 4,500, everything starts to move very quickly, and the ability to raise money with equity by picking up the phone if you're listed and calling Canaccord or Haywoods and throwing in a full warrant, suddenly it's very easy to raise money. We come from the private side. We're raising privately we're 100% retail, by the way. We've got 1,500 now. Actually, after this Chancery raise, we're going to be close to 2,000, just to reflect how big we are on the retail side, on the private side. So to get a retail guy to write a check on the private side is roughly 10 times harder than just when you're public and throwing in a full warrant. So I don't know. I mean, I think the market's super hot. It's very easy to raise money. But a lot of not tier 2 projects will get funded. But that's the reality when you're in a super hot market as well. But, so yeah, it's everyone's having a much better time of it, obviously, in the last 12 months. And I think the funding ability is going to stay here for a while.
Yeah. Looking forward over the next sort of few years, what are you most optimistic about across, obviously, the different commodities that you're involved in gold, critical minerals, and also looking at alternative mining models where should investors and industry leaders, I suppose, be a little bit more cautious?
I think gold and silver are still going to be the go-to trade. Obviously, at the moment, people are chasing some of the stuff that hasn't moved, like nickel and zinc, and they're chasing anything that looks good on a chart that's kind of at the bottom. Tungsten's going to have another phenomenal year, but I'm very happy just to stick with gold and silver going forward, because I just think it's in a very structurally ideal place for quite a while. And like you've seen in the Australian property market, if you sold 10 years or 20 years ago, you're looking a bit silly. And I think that's kind of the way to think of gold, that this is not something which is just a flash in the pan. So yeah, we just stick with the precious space for now. We came close to buying a nickel mine actually in Brazil, but then the market ran, and suddenly they had other offers. So we've decided to stick with gold and silver, and royalties, yeah, and tungsten.
Yeah. And lastly, just wondered just wondered if you can just give a conclusion, and also what you're really excited about. And I know obviously the royalty business you are, but just concluding, just wondered what you're excited about and what you want to share with our audience.
Well, thank you very much, Rob. Look, we're just super relieved. One, the market's turned finally. All of our 4 gold mines are either producing or going into production. It wasn't the case 18 months ago. We were really tough times. And I want to thank all of our amazing supporters who stuck with us. Very excited about all 4 gold companies: Pilar Gold, Liva Gold, Tucano Gold, Gold Road. Extremely excited about Pure Tungsten and Sanjong's mining in South Korea. We're heading over to Korea soon, and the mine opening will be in early April. But yeah, royalties is my focus, at least. I don't need to get up every morning and approve payments for salaries and deal with problems on site and breakdowns and all the stuff that comes with mining. We're looking for new deals, and we were just really excited about becoming bigger than Versamet or an Elemental. So yeah, if any of your viewers would like me to give them a shout, just click on the link below, and we're very active on the online space. And Max, Eric, and Ed and myself are always available. And it's the support of the retail market that has allowed all of this to happen. Because I tell you what, if you rely too much on one big fund or one big investor, they normally let you down at the last minute. Whereas retail guys, when they say they're going to do something, mums and dads, they do it. And that's the big difference and that's when we say we're going to do a royalty, we do it. And I say the royalty guys call them that name because I think a lot of their managements think they are royalty, and they're related to Kate and Harry and William. And we're not. We're simple folk. We're gold miners. And we're really excited to turn Chancery into a $1 billion plus company. Yeah.
Great to hear. We'll include obviously all those in the show notes, all those links for people to reach out to you and obviously have conversations and find out more about yourself and obviously about the business that you're involved in. And it looks an exciting time ahead, and hopefully you can come on the podcast later this year. Give us an update on obviously all the companies. That gold price may be 6,000 and above, maybe. So yeah, more than welcome to come on the podcast later this year and give us an update.
Thank you so much, Rob. Love your work, mate. You do a really great interview, and yeah, keep up the great work. Thank you.
Yeah, thank you. Thanks for listening. Hope you enjoyed the episode. As Jeremy's alluded to, obviously, precious metals are in the market at the moment. Gold is going to go a lot higher. But also looking at, obviously, the tungsten market, which not many people are speaking about. And Jeremy's has obviously got a great project there. And obviously the royalty streaming and a new venture that Jeremy's just launched. So please share this episode far and wide. Anyone that's obviously interested in precious metals or even in the royalty space, or even if they're not aware, gold is obviously in the news more so maybe it's about educating our mining industry. So please share this episode to all those that are interested and could be interested. Thank you again for listening, and until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.